All right, guten Morgen. Let me get my QB on. All right, welcome to QuantBox Live. Our opportunity to gather as a community and uncover the best fundamental opportunities across the globe. Well, it's now the best fundamental and market-based opportunities around the world. S&P 500, FTSE, DAX, gold, oil, dollar, pound, euro, yen, a whole bunch more. Very cool. So our AI-driven analysis of sentiment, inflation, employment, GDP, technical trends, open trade positioning, and seasonality, and what I suppose we could call market sentiment, uncovers the best fundamental investment opportunities. Anyways, my name is Wayne McDonald. I'm the founder. I'm also a Harvard-educated economist. I've been trading the markets for well over 20 years, and before that, I was a venture capitalist. Very interesting, but I'm a trend trader. Ultimately, that's what I am. I'm a trend trader. I develop my trends fundamentally using rational thinking, and then from then I use technical analysis to enter and exit my trades. So it is just after 6:30 on Wall Street. So if you're watching this on YouTube, you're many, many hours late. Why don't you swing by QuantBox.co, take the trial? It includes the live events that we do every morning at 6:30. It includes the macroeconomic training course. It includes the statistical analysis training course, so you understand what QuantBox is telling you. Great lousy bucks. Anywho, let's get on with it. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results, but please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Once again, here's the macroeconomic training course included with all memberships. Here's the QuantBox training course, which is statistical analysis, so that you know things like what's the smart money tracker, like how to read the commitment of traders report. Okay. How to do scatter plot. Yeah. Of course, how to trade like a Marine, how to trade like a farmer. And I forgot about these. How to trade like a floor trader. I forgot about those. Those are so cool. Anyways, that's where you find the stuff. Here's yesterday's video. Where we covered, yeah, I forgot about that too. We did the Baltic Dry Index. Very cool. So let's get on with a very interesting day. First of all, it's all about banks. Italy surprised everybody and decided to tax the banks. Okay, so the Italian banking system is vulnerable. And then in the United States, Moody has downgraded banks because they've been analyzing the government and the government's response to the bank vulnerability. So let's get this straight. The government forced the bank to buy 10-year T notes that were paying 0%. And now apparently banks are struggling to pay depositors 4 or 5% to compete with market forces. Yeah, guess what? Yeah. So banks are now have these huge portfolios of worthless assets that the government forced to force them to buy. And so now they're vulnerable. And because of that, Moody's is downgrading the banking system. And so that puts a sour taste in everybody's mouth. All right, cool. All right. 10-year T note. Is that, I thought this was lower than that. I have to double check. I wonder if that, well, yeah, this must be right. But anyways, I thought we were below the 10-year. I have to double check and see if that, yeah, I guess it must be right. Bitcoin, okay, still around 29,000. So not really much happening. Of course, you want to put your eyeballs right on the bias, right? Like nothing's happening right now. Stock markets around the world are flat. Euro dollar, okay, still below 110. S&P 500, 45. Although there's going to be some downward pressure to this, I'm sure. Gold flat. Oil nosedive today. Remember when we were just at 83? Remember that? We were just there like what, 48 hours ago, Sunday night. Look, we're at 83. It's massive resistance. We even if you're a bull, you need this to drop. Hey, it's dropped. What do you want to do? Well, now the market has turned sour and you're like, well, I don't want to buy it now. Everything sounds bad. Well, that's how you get oil to come down. Well, it's not going to come down when everything sounds good. So this is where you have to fall back on your research. Okay. Now, chickadee, check this out. Let's expand QB. Let's I want to go to the scatter plot. Okay. And let's maximize this. Do you know what this says? Everything is behaving properly. How many times have we seen this? Almost never, huh? It's rare. So when you see this, okay, this is like what the average price of all these assets. Yeah, that's everything in this quadrant and everything in the right in the bottom left and upper right are as expected. So the outliers here are okay. Oil's way down, and the Japanese stock market is slightly up. Okay. But other than that, everything is right as rain, but modestly. So the things that are down maximum about a 1%. So that's not like a ridiculous day, but nonetheless, interesting. We don't typically see a market with very few outliers. But anyways, that's as expected. Everything seems to be working. I want to show the oil. Show the oil. Yeah, so let's just go with commodities. We'll look at the stock market as well. My WTI. I'll put it on a smaller time frame, like an hour. Okay, and here we are, way up here at resistance, and this goes back quite some time. I have to click, 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 click. I can't even do it on an hourly chart. There we go. This goes all the way back to November. It was a top here, basically top here. Okay, basically top here, top here. Okay, top-ish here. So cool. So what we were saying not long ago is even if you're a bull, you really want it to come back. You want to buy a dip. And so now you got to get ready. Is it 80? Or are you going to wait for, okay, let's say it comes down and then up and then down and then higher, high, higher, low. Okay. Is that what you're going to wait for? The thing is, I want you to plan it now. Okay. You need to think about it now. Do you want to own oil at 80 and take it to 100? Or do you think oil is going to drop to 70? I guess we can dumb it down even more. Are we on our way to 70 or 90? If you can't put together an argument with facts, I mean, show me the facts. Well, Wayne, if you looked at the rig count from last Friday's Baker Hughes report, and then you looked at the IMF's revision to global GDP in 2024, and okay, if you're doing stuff like that, you rock. Okay. If you're not, what is it that you do? Okay, cool. That reminds me, oh, I wanted to mention China today. Did you guys get the Chinese data? It's not looking good. Again, yet another report Less exports, fewer imports, fewer exports. It's horrible. The Chinese are in a desperate situation. They're not buying Louis Vuitton purses, they're buying Coach. Oh my God. That's horrible. There's even rumors that they're buying Michael Kors purses, and that's just a sign of being desperate. It's horrible. They need to be saved. So, anyways, what does that do for global demand? Probably doesn't push up iron ore and coal prices, anyways. So, more bad data, more bad. And still not a lot of signs of massive stimulus. So, anyways, oil's down today, but just maybe down today. So, if you're going to be a trader, you want to pick your lines in which you might want to re-participate in the marketplace as a bull. Bears are already in it. Bears are doing what they're doing. Cool. So, if you're going to be a bull, you can rinse and repeat. Very similar situation. And you can do it this way, and you can see this whole area here. I know I got a lot going on here. Sorry about that. Okay, but this whole area here, which is the measurement of here to here, and then you're thinking like this in the future if you're a bull. So 80 down to 77. Okay. These are the two areas. Johnny says, yeah, seasonality says down. Yeah, for sure. So that's already in play here. Also, with the idea that the stock market's supposed to come down this time of year. Yeah. Which I prepared for in the third week of June. So, yeah, it's all part of the game. Here's our gold play looking lovely. It hasn't quite worked yet, but it's definitely hasn't not worked. Very cool. Getting squashed by that 21 EMA. Luflitulumum. Okay, that's also risk off. And I would assume that's seasonal as well. Okay. Remember, target for gold is 1900. Yeah, 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 yeah. Okay, let's look at the S&P 500 here. Yeah. Yeah, I want to check that. Price is off. Might have to yell at the developers again. What are we? 45.18. It's slightly off, huh? I'll have to double check that. Also, the other thing that caught my eye is that I don't think that's the yield on the 10-year T-note. I think it's 3.99. So I wonder what's going on. I have to yell at somebody. Let's see if I have it here. If it's just that tool. Oop, and that's off. Yeah, that looks, I think it's off. I have to, we must have a data provider thing. Oh, by the way, on a totally different data provider, I've been screaming and yelling at the candlestick provider data to tradeplans.ai. And with a little yelling and a little honey, taking honey from the honey pot, uh, they're going to start providing, it'll probably take a month and then it'll take some development work, but gold, silver, and WTI. Gold and silver first, and then probably a couple of weeks later, we'll have WTI for your trade plans. So I just have to reach in, and I'm kind of like Pooh Bear, where I'm got my head stuck in the honey pot trying to find some more honey. to pay for all of this. But it's getting done anyway. So hours and hours and hours are being spent um, in hopes that it'll help you. So let's see what can be done. But these things happen all of a sudden, like data providers are not providing data, and you're like, where's our data? So anyway, so I apologize for that. I don't think that's right either. Let's see. 10-year US Treasury yield trading view. Okay, trading view. Sure, why not? Let's do a trading view. Is it going to give us one? Of course, that is nothing. US Treasury, it's nothing gobbledygook. 10-year. Oh, I don't want real yield. Ten-year price. Will I give it here? Yeah, so I thought it was 3.99. So right now it's 4.20. All right. So yeah, so I'll have to yell at people. I just paid a big fat check. So to see the data off, it bugs me. So anyway, sorry about that. It's usually a data provider. All right. So anyways, yeah. Yeah. Still generally risk off, but remember this was -5. Remember that? Now it's -2. We went from extreme risk off to risk off. Once again, doesn't that smell like kind of slightly bearish to to mostly sideways? Yeah, well, we talked about that in January and February and March and April and May and June, and then expected it during July and August. We didn't get it in July, but we do now have it in August. And really, this kind of market crept in at the end of July. So nonetheless, I would call that a big win. You're like, what do you mean a big win? Well, we're trying to understand market conditions so we can be prepared, right? Like ultimately, aren't we trying to remove the randomness as much as possible? And then with the randomness gone, we can then focus on making informed investment decisions, both long term and short term. So if we can say, oh my God, in August, we're going to have lower volume, lower volatility, and the markets are going to fade. Everything that was up will probably be down, and everything that is down will be slightly up. And then on top of that, probably not reversals, but definitely fades sideways to down. And then all of a sudden, right on schedule, that happens. Well, the chances of you being shocked by that and making poor investment decisions now is diminished to almost zero. And that's a big win. Just if you can do that 3, 4, 5, 6, 7 weeks in advance. Okay. Remember, I've been trying to train you to even like plan your vacations around this. I didn't do it this year, but very often July 1st, I show up and I'm somewhere else in the world. I'm like, look at me, Canada Day, right? You're like, where's that guy? Yeah, somewhere tropical, glistening in my with my Canadian white body, glowing like a dwarf star on the beach. You're like, wow, that guy's reflective. Yeah, the whitest thing in the world is when I put my feet in the swimming pool. You're like, whoa. So when I show up on the beach, yeah. Well, this year I'm doing a trip to Cuba, and I'm rushing back to be here the third week of August. So I do plan my life around these things. So anywho, so right now, even our slight risk off, our medium term risk off, has gone from extreme to not extreme risk off, then probably back to neutral. Okay. VIX is still high. What is the VIX today? VIX index. 17. Really? That's it? $16.13. So that's what, yeah, I'm going to have to yell at the developers too. That I think this is misleading. It's not a percent. It's the total, I think, is how they're doing it. So remember, we gather the data and it still has to be presented by humans. And I think maybe that's not being presented quite right. It's not up 16%, but that's not a big deal, actually. Once VIX is around 20, 25, really 25, 30 is a big deal. But nonetheless, if you look at the history, let's go 6 months. Yeah, you can see here VIX at 26. Yeah. I actually want this to go up because I do want to pull back in the stock market. I'd love to see a 7% decline in the S&P 500. Be great. 10, sure, but 7, yeah, that'd be great. I'd like VIX to go to 26 because I have a strategy in place. Well, I have a strategy I can leverage, I should say. If VIX is falling, I can make money on that. And typically, if the VIX is falling, the stock market is going up. Just as a reminder for everybody, if VIX is going up, investors that own the S&P 500 already, a cash position in the stock market, okay, it could literally be the S&P 500 or it could just be stock. Okay? And all of a sudden you're losing sleep at night because you're worried the value of your stock portfolio is going to fall because the broad market is falling. And you're like, well, I need some way to kind of insure everything. So you buy options on the S&P 500, puts in fact. So if the S&P 500 falls, your option will make money and offset the cash position loss. And you're hedged. So what this means is in the last couple of weeks, investors are hedging. They don't want to exit because then they'd have no assets. They'd have cash, and cash is trash. So they'd rather hedge and go on vacation. Sweet. So I'd love for them to hedge more. Bring it up to 25, everybody. And then I'll dump her. Okay, cool. Anyways, S&P 500 down slightly. Okay, so we're looking at all these things. The dollar index up. So that's, I think, let's move on to that. I think what I really like is that the dollar's strong exactly the time of year we would expect it. And it was terribly, terribly weak not long ago. So again, to be able to talk about it weeks in advance is really cool, I think. So our pig, okay, our great British pig, big, great big pig. QuantBox has pound dollar falling down in the July, August, September period. And look how up pound dollar was, and then suddenly, ow! Look at what we thought. From June to July up, June to July up it was. And then suddenly July, August, September down. Boom, boom, boom. And then what? September, October, November, December, up. So the volatility this year is quite high, and that's the one in gray. But it's following seasonality pretty okay, don't you think? Yeah, it's pretty good. Up and down, up and down. So it should be down another 4 or 5 weeks and then up the rest of the year. Cool. So right now you would think dollar strong, pound weakness, and that's what we have. This yeah. So anyways, I'd like to, so you're I guess what we're saying here is you can let it fall and then buy it back, or you sell it for now. Okay. Let's also I guess before we do that, we look at Aussie. re-expand it. Okay. $65.30 could be as low as $63.43. Okay. July, August, September, this pair is down. Okay. 68% of institutional investors are short. Look at the poor retail guys. Oops. 69% of retail's long. Oh, retail. Retail. So, anyways, 68% of institutional is short the Aussie and 55% are long the dollar. So it's pretty okay for now. It should be down for a few more weeks. All right. So that's pound dollar, Aussie dollar, for example. And we can switch over and find those dollar pairs. So we had, of course, none of them are on this chart. Thank you. Anyways, uh, there's your pound dollar. It's down on a shorter time frame. It's not great day trading, but nonetheless, because there's some consolidation there. But nonetheless, if this whole time you were a bear, your job is to kind of look for your opportunities that end up being bearish, right? Trying to get this in there. I can't quite see it. I think the central pivot is right below this. Okay. So, anyways, I'm going to have to draw this because there's overlapping pivots. You can't even see them. All right. So, if you're a bear and you're a swing trader, which by definition, just so we understand each other, if you're a bear and you're a swing trader, that means you're going to be short for the week. You're going to be in this trade somewhere between 2 days and 10 days, 2 days and 7 days. Usually you sell on Sunday and you take profit on a Thursday, that kind of thing, right? That's the sell zone. Cool. Only if you're a bear, though. It doesn't make you a bear. You have to already be a bear. Okay. And so now we're in this kind of range. So maybe the next move as a bear is here. This is today's target. You can already see we're approaching the conservative target for the day. Okay. This is the selling zone for today. This is the aggressive target for today. So let's say it just comes down somewhere in between. Then tomorrow, this is tomorrow's sell zone, be in here. And so if we're down here, the trade plan will be have it come up and head down to the next level. And I do that in dots because that's projected. Okay. Will we get through this? Oh, I don't know. But the pivot point suggests yes. But remember, it's only a bearish pivot point. It doesn't predict the future. It just says if you're a bear, what's the likely target? The likely target is, yeah, this great green zone. And if you're combined monthly and weekly, so now monthly is you're short a few weeks, like 2 or 3 weeks, not 2 or 3 days, like a day trader, right? Or a swing trader. So the combined position and swing trading target is right here. That's both, okay, monthly target and weekly target. So you know what? That could be very attractive to market participants, right? Yeah, Johnny's like, yeah, when those daily sell zones are up, you need to wait. Yeah, yeah, for sure. But it's like one of these things, Johnny, like if this is your sell zone, okay, you don't have to wait for this and this and this. And what Johnny is talking about is these daily sell zones. This one's higher than the one before, so you want the new one to be lower than today. That's true. But you can also try trade a double top on a smaller time frame. Remember, when it's a double top, you have two choices: trade the right shoulder or trade the neckline, right? The basically, right? Shoulder or neckline. So yeah, you can wait, as you say, that's what you wait, and that is best scenario, least risk. Okay. Yep. Either way, the target, remember, entering trades is actually the easiest part of trading. Now, if you're newer, you struggle with that. That's okay. We all do. Okay. When you learned how to drive a stick shift, did you stall it the first time? Yeah. Did you stall it the second time? Uh-huh. What about the third time? And then you stalled it. Yeah. It happens. This is how you learn how to drive a stick shift. So, anyways, the next part is, when do you get out? And that's a much harder question to answer, I think. Traders are always worried about that. And so, knowing that that's the target for the weekend for the month, yeah, many market participants will want to take profit down there. So, perhaps we're going there. Okay. Cool. And then the Aussie, which I don't even have on here. So, let me take this one. Beautiful, though. Dollar strength against the Canadian dollar, USD. Again, it's very seasonal. It wasn't happening in July, but it's happening in August. Okay. So I wanted to switch this over, though, because we talked about Aussie. Come on, Aussie. There we go. Lufle. Okay. I got to switch this around because it's not CAD anymore. Okay. So if we're bullish on USD, then we're going to be bearish on this pair because, all right. All right. So there we go. There's our Aussie dollar. Okay. Isn't that interesting? That's the central pivot point. We can go out to a month. Okay. Back, is that monthly or yearly? I guess that's probably yearly. Yeah. That's even more interesting. That's the yearly central pivot point. Whoa. That is so odd, huh? Look at that. Wow. I mean, look, seriously, if you see that, what's your belief system? Do you believe institutional investors use the annual pivot points when trading Aussie USD? Or is that just random? Just random. Well, that's for you to decide. You have to use the tools that are available to you. And every golfer has a favorite club. You have to choose between the 5-iron and the 6-iron. You're like, oof, my magic 6. Your 6-iron is magic, but your 5-iron's not magic? No, it's okay. Yeah. Do you have to have a belief system? Do you believe that that's random, or do you believe that's incorporated in the investment decisions of uh, market participants that move the market? Yeah, cool. What about this 4-hour chart? Do you ever tell people when you're talking to your friends and stuff, you're like, oh, the most beautiful thing in trading is that 4-hour chart. And that 21 EMA is truly a thing of beauty. Yeah, cool. Me too. Lower low, lower high, lower low, lower high, right? How about these pivot areas for selling? This is a sell zone. But like Johnny says, that's a higher size zone, sell zone. So he'll pass on that. But Johnny always takes the next one. Here's the sell zone. And then here's the sell zone. And here's the sell zone. And you're like, well, what are these sell zones again, Wayne? Those are your weekly trade plans. You sell and you go away for the week. You sell, you go away for the week. You sell, you go away for the week. Okay. Whoa. That's cool, right? But not only that, at the beginning of the week, here's your target as a bear or your entry as a bear. That's your sell zone. Here is the prediction of where we will go in advance, days in advance. Oh, God. And then it says, yeah, then it's going to fade. And then this is your new sell zone days in advance, guys. So, on a Friday, and then you probably take it on a Tuesday. And on that day, you already know that this is the projected target. Oh my God. There, you're right. You hit it on a Thursday, comes up. There's the sell zone for the new week. And what's the target for this week? The conservative target, 64.26, aggressive target, 63.80. It's even labeled. Okay. So the trade plan, sell here. Okay. Exit here. That's the trade plan. We call that a swing trade. Okay. And then the assumption is this will last forever. I know that's not a great assumption, but you want to stay a trend trader as long as possible. So not only will this hit target, that's next week's trade plan, right? I don't know the exact price yet because it's Tuesday morning. I can't plan out next week with exact prices because I don't know what the bottom is this week, but I can put some guesses in anyways. But as we go to Thursday or Friday, this will not be quite locked in, but we'll have a very reasonable idea. But also, I don't use just pivot points, I use price action. Okay. So you see things like this all the time. Okay. All right. So lower low up to the previous support is now resistance, drop it. Okay. Up to the old support, which is now resistance, drop it. So if this is the old support next week, then I plan on dropping it. Cool. Johnny's like, yeah, we're already on the target. Yeah. And I wanted to point that out. Uh, but we had it set up this way. We can do it this way. And yeah, Johnny's right. So, what was the plan for the month? The plan for the month, when I look at this, it depends on your interpretation. Okay. Was this trade here front running the new month? Were they in a day or two early? You might say yes. Someone else will say no. They think this is what's happening. They're like, no, no, no. The first day of the month, we were at the central. Someone else will say, well, it was a front run. They already made a decision. Well, I don't know. What do you think? I mean, what you think is what you think. So if you think this is the actual top of the month of August, then we're on the target. We are now done right now. Okay. If you are pricing this as the top of the market for the month of August, then this is the target 64 and a half. Which one's right? I don't know. Okay. And notice either way, we're playing this. Okay. I mean, look at this. Let's grab this. Oops. Let's grab this bottom and this bottom and drag that over. Okay. Which one are you targeting? Okay. Cool. Okay. Now, it was a pretty tight month. Let's go a little more aggressive here. We last month we had an M2 to R1 month, and that's tight. That's a bad month, so to speak. Nobody is really happy with this, right? With a month like that. The target was up here. I mean, so bulls are not happy, and they probably hung on to it, which means they got knocked out at break even, right? Bulls broke even or whatever, small profit. Bears were not in it for very long. Never had an opportunity. Maybe they sold the top, but that's not, I would say that's not reasonable. So what if we were going to make a move outside this range? What if we are actually going to go lower? The number here is 62.82. So we're on our way to 63. Okay. Okay. But I think it's a little too early for that. So if I really had to guess, okay. But nonetheless, do you see how powerful the technicals were? Yeah. So be careful now, as Johnny points out. Okay. Beauty. Ripper. Okay. And so on QuantBox, if you go to USD seasonality star new, okay, you'll see Aussie dollars typically down this time of year. Kiwi dollars typically down this time of year. USD CAD is typically up this time of year. Okay. USD yen is typically up this time of year. Pound dollars typically down this time of year. Euro dollars typically down this year. Euro dollars fallen, pound dollars fallen, right? It's kind of hard to see. Did this kind of bottom out? I think so. So USD yen is a check. Aussie dollars a check. Okay. Kiwi dollar went from super up to now down following seasonality. Okay. The gray line is what's actually happening. You see how it was disconnected and then suddenly reconnected? That USD CAD. It was seasonally very, very weak or very, very down, right? And then suddenly turned right back in with seasonality. You can see, look at the red part here. I know it's hard to see. Get out here. Okay. Like look at the red line on USD CAD. That's what's happened over the last 5 years. So it's moved a lot more in the last 5 years than in the last 20 years. But look at how it realigns. Yeah, USD yen is well, not falling anymore. Anyways, we'll see there. But look at these like big drops this time of year, and then a reversal. Big drops this time of year, big reversal. Big drops this time of year, big reversal. Big drops this time of year. Okay. Remember, I just added this 4 weeks ago as a bonus to all pro subscribers of QuantBox so that you could see very often a change is coming in the US dollar, that it goes from weak to strong. And it's gone from weak to strong. Head high by July. I don't know why it works. Does it matter? You plant the seeds in April, head high by July. When are you going to harvest? Harvest is September, October, November, right? It's just time of year kind of stuff. The crazy thing is 99% of retail traders don't know this. But even 75% of institutional traders don't know this as well. When I show this to hedge funds, they're shocked. Shocked. Yeah. Cool. So, anyways, it's there. I hope you reaffirm from time to time. You reaffirm, you look at this and you're like, oh, no, 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 no. This is what typically happens. It's the annual cycle. It's the season. That's why they call it seasonality. We're not talking about salt and pepper on your ribeye. No. Seasonality, seasons, the year. Sometimes it snows. Sometimes it's beautifully warm. And in Canada, it could be the same week. But most places, it's cold in the winter, too cold in the winter, too hot in the summer. Yeah. Just out of interesting curiosity and fact, I grew up in a place called Saskatchewan, and it's got the largest variance of temperature in the world. There's no place that's colder and hotter in the same year than Saskatchewan. And if you know your Celsius, it goes -40 to probably, I don't know, +40 every once in a while in the same year, and it's ridiculous. So, anyways, when we're talking about this, there's times to hold them and times to fold them. And it's really nice to know in advance what typically happens. We don't know any given day, but I love the example of a farmer has a pretty good idea that they're going to plant the seeds in April. What day? What day in April next year are they going to plant the seeds? Well, they don't actually know. Is there still snow in the fields? Did the snow melt and leave puddles of water? Did the fields dry yet? Okay. We don't know any given day, but you're pretty sure it's going to be around April. Cool. So you're ready, willing, and able to plant the seeds. Okay. So you look at this and let's predict the future. Somewhere around September, sometime, right? Sometime even before September, sometime around September, sometime around September, sometime around September. What do you think? Maybe sometime around September, we should be ready for a change in direction. I don't know. That's for you to decide. I don't know the future. But to ignore the past would be silly, wouldn't it? The sum of 20 years of research. Forget about it. It's all random. It's a random walk down Wall Street. And I've even been told the guy that wrote that book, he actually called it a random walk down Wall Street by a drunk. That's the random walk part. The guy's drunk when he's walking down Wall Street. And you can't predict where the next foot's going to land. I think that's poppycock. I don't even know what that means, but I don't believe that. Nor do I believe in the efficient hypotheses theory in which everything is priced in because everyone trades rationally and perfectly. So by the time you create some value, it's already been arbitraged out by other brilliant people like you. So why even try? I can't even understand a person that thinks that way. Why even try? It's all priced in. Really? Oh my God. Right. So, anyways, those are two things I don't believe, that it's all random and that you can't get an edge. Yeah. Well, anyways, I think a lot of people are shocked the dollar's strong right now, and we are not. We prepared weeks and months in advance, and here we are. So, anyways, that's the love for the morning, the QB love. Forget QB Live. This is QB Love. So, good morning, and I will see you tomorrow. Peace on earth. May the pips be with you. May your profits be above average. Have a nice day. Cheers.